JB here. Hope everyone's doing outstanding. Tuesday, March 25th, 3:10. This Friday afternoon, talk quick about the market, some names I'm looking at, go from there. S&P is pretty much flat here today. We had a rally up about from 10 o'clock all the way up to 11 o'clock. The SPY hit 576 and change. Came back, tried to test red for a bit, and we've just been kind of like chopping around. I posted it before. Today is the third tightest trading range of the year, and you look, and that's the tightest range was 0.3% back in February 14th. The second tightest range was January 22nd, 0.4%. And then we have today, 0.45% trading range. Just remarkable. I mean, we're going to go back to those late November, early December trading ranges where we were 0.3% was kind of like the norm. We'll have to see, but pretty remarkable considering what the market's been trading in an extremely wide range recently. So to see it kind of hold its ground, it's tough because I mean, I was saying it yesterday in the chat room. It's like we had to gap and chop, right? Some people call it gap and trap when you have a gap and then they sell it off. But it was like we had a gap yesterday and then we just chopped around pretty much all the way until the late afternoon where we had a quick surge, hit highs, pull back a little bit, and still closed up nicely. Today it's been we tried to rally and then melted to lows, but lows was flat at a session, and we just been chopping here. So outside a few names, the rest are I guess chalking up consolidation. Hopefully, just consolidation before the next leg. I'm hoping it's not a premium crush, and then we reverse tomorrow. But I guess the good thing is we got consumer confidence out of the way, the soft data. So consumer confidence laid an egg. I mean, it was lower than expectations. And then you have, I didn't even know they have these indexes, but there's three separate components of the consumer confidence. So why is this not coming up here? Oh, so uh, they have an expectation index, and supposedly that dropped to its lowest level in 12 years, well below the threshold of 80. So that's at 65%. So they say under a threshold of 80, that usually signals a recession is ahead. So it's at 65. It hasn't been that low since 2013. And then you go back 2009 and 2011 was in the 40s. So again, that's the soft data. That was the argument made by Fed Chair Powell. We'll see if that soft data remains, but it's like all the headlines, everything that's gone on with the tariffs and all the back and forth. It's like you have to think that, and the egg prices and all these other just elements to it. You have to think a lot of that is those headlines feeding the soft data, the surveys, right? Uh, I mean, if they come to fruition, I mean, it's just one piece of data. But either way, market kind of shook it off, and now we have PCE data on Friday. That'll be the next big data piece. But for now, the SPY's holding its 200-day moving average. Hopefully we just get even if it's a slightly green close here today, and resume the melt up to 582 or so by the end of the week. I think that will be the first target. And yeah, good stuff. And then you take a look at the VIX, and the VIX has been pretty much doing nothing, right? It's down 0.8% right now, and it was flat before. That it's not. It's like you again. You would think that the market's been trading in this kind of calm for the last week or so, and it has, which we're just off of Friday's reversal. So that's kind of the overall market, and with that, it's tough to pick and choose. I say small can become big when volatile markets, and big can become small. But when you have choppy markets that are not moving directionless today and somewhat yesterday, this is where premiums can just kill you. So I've been very selective. So this morning, Wayfair was like 37 to change. Well, it opened at 38, ran down to 37 to change, and then galloped back up into the mid 38s. I closed some of my calls out for close to 100%, ran up to 39.14, gave it back again. It's sitting here, it's still up 1% here today. I think it heads to $42 before the week is out. So I'll hold the rest of the calls. It just, again, I think it's been oversold from the tariffs. And you look at its last 3 quarters, its earnings have been phenomenal. The stock the reactions have been positive, and then it's given it all back. So I think there's an opportunity here for a bigger move to the upside. And again, the 50 days at 41.61, I think it heads over $42. So thankfully, lock some of those in. And then as I was talking about yesterday and today, I finally got some Dell calls. I was actually looking at weekly strikes, but Dell's it hasn't moved as much as I would like recently. It's kind of been a slow mover. And even last week, it broke over 100, got over to 101, and it just kind of like just didn't do too much thereafter. So I didn't want to be in a spot where I have to worry about the calls getting premium this week for it to rally. So I don't know if it needs a catalyst or an upgrade or something to that effect. But to me, it just feels like a ticking time bomb. And one of these days, it's going to resume what it's done. And it had it at the end of January to February. It ran from $100 to 120. It's had histories of these multi-day moves. So I went and got some strikes into next week. Some huge volume. I there was maybe 20 or 30 contracts on the volume, and next thing you know, it was 1,000. I didn't even look to see how many they are now. So if you take a look at Dell has had uh, 15,000 calls traded today, and let's just see what the strike is. So 15,000. So nine, 2,000 of those or 1,900 of those contracts are the strikes for next week. So that's pretty much 16% of the volume on the calls today. But still like this name again. I mean, there's a lot to like. It's just a matter of time before it starts to get going. So that's kind of why I added those strikes. And then Roku. At first I was kicking myself for maybe closing the calls out yesterday, but then it's just sitting here. It's stuck right at its 50-day moving average. Looked like it was going to break out in the morning. It's so still looking for possibly adding some strikes for next week, similar to Dell, but I'll be patient. Nice set, and it's been on a big run over the last 4 sessions. So, I mean, it was in the 60s last week. So to see it up here at 80, I mean, that's a big move and maybe a little consolidation for the next leg. So that's kind of the thought process there. But I'll be a little patient adding strikes there. Um, and then Shop similar. If you look at the chart on Shop and the chart on Roku, it's almost identical. Stuck at the 50-day moving average. Um, you know, Same kind of story. Thankful I locked the calls in. I mean, if I had to pick two horses, I think the Wayfair horse, the W horse, has more upside potential, at least in the short term. So I'll continue to hold those strikes, and I'll keep looking at Chop because if it starts to break, I think 115 comes, and if not higher, similar to W. It's been the sell off to me has been somewhat unwarranted, kind of just grouped in with the tariff names as sell off, which kind of comical. Which brings me to GameStop, and so if you haven't followed GameStop with Ryan Cohen, of course he had added a stake. That was some of the bull case before it really started to take off on that squeeze. And then, he came on as CEO in September of 2023 with no salary, right? So he's not taking a salary. And since that time, every time GameStop does their earnings, which they'll have earnings after the close today, there's no conference call, right? So, um, you got to think, what would he go on and talk about in the conference? He's just going to get peppered with questions around a archaic brand, right? A business that eventually, unless they're able to figure things out in regards to find another growth area. I mean, you look down, you look 5-10 years from now, it's probably not going to exist, at least in the current format, unless they change. So I would assume there'll be some kind of announcement today. If not, I mean, people have been waiting since last year. But again, you have Ryan Cohen with Michael Saylor back in February. I mean, you think he's got to do something with that cash hoard. So the other thought in the back of my head is the weekly strikes, which finally started gaining some premium. I think they're up 16% now. Let's see. Uh, yeah, about up 10%. I might look to close my strikes for this week and get April calls and just go further out, because if they don't announce news today, I don't want to be in a spot where the premiums just get crushed and then they come out with news in a week or two and then I'll be disappointed. So I might just take that risk off and just go further out and pay for further out in the money calls around the same price. I was looking maybe 35s, 36s for April. So don't be surprised if I do that in the next 40 minutes, because if they just announce earnings, and even if it's like a slight growth, like even if the company's showing, wow, finally they had returned to revenue growth, I don't know that would put the stock 28, 29, 30. If they announce some kind of news or update in regards to their cash position, maybe plans or something to that effect, or there's some other news coupled with the earnings release in regards to doing something with crypto or something like that, then I mean, I think the stock would trade over $30 in a flash. So that's kind of the hope there. But then I don't want to be disappointed. It just comes out with the earnings release. There's no press conference. There's no update. And then, you know, see some news come out next week after my calls expire, or the week after. So don't be surprised if I had some later strikes. But I mean, you take a look, and GameStop was over $30 to start the year. It was $34. It's been up and down. Back in the middle of February, it was over 28 and hit the 50-day moving average. Couldn't break through. Here it is again at the 50-day, 25.66. It starts 25.35. Um, I don't think it will take much for it to get over $30. And then you have to think if there's some kind of update, I think that will bring back a lot of people who've been bullish the name for a while. That probably been on the sidelines saying, "Hey, this is the news we've been waiting for." So the other thing is it doesn't have that huge short interest anymore. So a lot of that's been unwound. So it's not like a short squeeze play. But I do think when you take a look at the fundamentals, and when I say fundamentals, it's an $11 billion company, nearly $5 billion in cash, huge scale in regards to locations. So there's things that they can do that they might be able to return shareholder value. So that's kind of the thought process there. I think that's about it, folks. Yeah, take a look at Tesla today. You would think it's going to zero, right? And I haven't traded Tesla in a while. Tough one, right? Because pretty much the company's alienated 50%, or a little more than 50 or a little less than 50% of their base, right? I mean, that's just it has. So not only that, the people who are um, driving the vehicles, maybe they don't want to drive them anymore because they feel maybe that they could be a target, right? So the thing is with Tesla, it's not about the cars as much as it used to be, right? It is somewhat at the robo taxis, but eventually they'll have their Optimus. Not a rant for today, but it just kind of like, I'm not Tesla in general, but like the market in general, it's very easy to get the goggles on. And last week, you could on Friday morning when markets were rolling, you could have had your bear goggles on, thinking this is it. We're going to go into a bear market, and then boom, here we are. The SPY was at 558 on Friday morning. Here it is, was up to 576 less than 2 days later, two trading sessions later. So it's always important to kind of be open to both sides. Otherwise, regardless of what the story is, I'm trying to think of some of the shorts over the years that, like, that it's going to zero. Like I used to trade Sears Holdings back in the day, not because I thought Sears Roebuck was going to go back to his glory days, but it's because it used to have similar to what GameStop have, and I got to go back to when I used to trade it. But there was like 120% of the outstanding share count was accounted for, whether it be institutions, insiders, funds, beneficial owners, all that fun stuff. So Sears Holdings was like a squeeze play, right? It was like, hey, the shorts might have to cover. All it's going to take is one little catalyst or whatever, and the stock it used to rally like 20% in 2 days on no news, right? So but then you see the result. At some point you knew it was going, it did a spin-off once of Land's End. There was great story. So my point is, you could have been short that name, but you could have been shaken out of that short position because of the squeezes, because of the bounces and things like that. So anyway, that's it, folks. Let's have a great day. I was saying I was keeping things small last week with the market being kind of volatile, and here today it's like it doesn't make sense to put risk on if I feel like it might be a premium crush. So if I do see some opportunities into the end of the day, I'll add some, and then probably I'm going to close the GameStop calls for this week and look to get some April strikes. And that's it, folks. Let's have a great day. I'll be back rock and roll.